Hello, everyone, and welcome to the official channel of GMAT Club. My name is Dipesh, and I'm your host for the day. When I started my MBA journey, the thing that I dreaded the most was financing my MBA. With little to no savings, I was almost always worried about financing my MBA. And this worry didn't end until very recently when my finances were finally fixed. Whether you are a recent admit or someone planning to pursue an MBA in the near future, this session will provide you insights on ways to finance your MBA with little to no savings. For this, we have Ankit Mehra, ESA graduate and founder and CEO of GyanDhan. Hello, Ankit, and welcome to the session.
Hi, Dipesh, and thanks for having me on the session.
Glad to have you. So, Ankit, let's start with the session. For our audience, we are going to split the session in three parts. The first one will focus on the PowerPoint presentation, where we'll speak about the options that we have. The second one will we will address some common FAQs, and the third one we will be addressing questions from the audience. So, over to you, Ankit.
Sure, cool. Hi everyone. I'm Ankit Mehra. I'm one of the co-founders at GyanDhan. Just giving quick background, as Dipesh mentioned, I'm an ESA alum, and I got the idea of starting GyanDhan when I was pursuing my MBA from ESA Business School. I saw a lot of my peer group were facing troubles arranging financing, and I thought there has to be a better way of arranging financing than what was prevalent back then. In the last 9 years, we've been on this journey trying to improve the processes. I think there has been a lot that has changed since 2015, but I think there is a lot more that change needs to be done. And so we continue to be on this journey. At GyanDhan, we are a marketplace for education loans. And the intent really is to help students get their place on the world stage by helping them finance their higher education. I think I'll just get started with the slides quickly. As Dipesh was mentioning, the objective of today's discussion is really how do you fund your MBA when you don't have personal savings, right? And to be very honest, I'll actually take it to the next level saying, hey, even if you have personal savings, you probably could take a loan because you could get tax benefit, or you could probably be investing that money elsewhere, getting a higher return. I mean, these days when the stock markets are going crazy, maybe people are better suited putting money in the stock markets and getting a higher return than they would get on the loans, or they would have to pay on the loans. Just quickly touching upon GyanDhan, as I said, we are on a mission to equalize and expand access to higher education. Since our inception, now we've helped over 25,000 students. We've done 8,000 crore loans in disbursals through our marketplace. And on the platform, really, the way to look at it is we are more like an Amazon. You go to Amazon, you want to buy a pen, there will be 20 vendors. Similarly, we pretty much brought in 15 banks on our platform, and we help find which is the best loan for you, because there isn't really one pen that fits everyone's profile. Someone might like some kind of a pen, someone might like a different kind of a pen. Similarly, depending on your profile, an SBI loan might be best for one. For someone else, an Incred loan might be best. And that is what we're trying to do here. As a matter of fact, we ourselves are also a registered lender now. So in addition to being a marketplace, we are also a lender. But the idea really is we are trying to figure out which is the best loan for you. And that is the loan you should be getting. Now, Dipesh mentioned what to do when you don't have savings. But before getting into that, really, pretty much when you come to financing your higher education, there are really 4 buckets that we'll break it down into: scholarships, part-time jobs, education loans, and self-funding. And like Dipesh mentioned, some of you might already be planning to go this year, but for others, they might be looking at in the future. So for the folks who are planning to go into the future, that first bucket is very, very important. Because a lot of times we end up missing that bucket. We don't do proper research in terms of how to get scholarships. Or as an Indian male engineer, you might be applying in the third round, and guess what? You aren't going to get any scholarships. All the scholarships have vanished. Your chances as it is of getting a scholarship in the first round are slim. So you need to be early, right? But the idea really is, if you're getting free money, why not make the best use of it? Right. As far as MBA is concerned, I would probably put part-time jobs a bit lower on the pecking order, typically because many MBA programs can be quite grueling. So it isn't that you will have a lot of time to kind of do part-time jobs or assistantship. But again, whatever money helps you further your cause, you should have that. And then comes the kind of, I would say, 3 and 4 in my mind always are a kind of are a priority, a preference, that even if I have money, I might still take a loan. And that was actually the case with me. I was lucky enough to make some investments which had yielded me certain returns. But when I went to do my MBA, I actually took a loan. And it was only after the MBA, when I was graduating, that I kind of paid off the loan, saying, hey, I'm already going to take another risk by doing a startup. I don't want to have another risk of a loan on my head. Before getting into how do you get an education loan, the idea really is, I already talked about tax savings and kind of the aspect that you can kind of make those investments elsewhere. There's also a couple of other elements which is essentially relates to building your credit history, and also the important point of fourth point, which is instilling financial prudence. And this is something where I'm pretty much targeting more the parents, because a lot of times we see parents are of so CEOs of an NBFC have reached out to us saying, hey, I'm sending my kid abroad, I'm looking for a loan. That is primarily because of points 2 and 4. They're trying to get the tax savings, wherein they can get a 30% deduction on the income tax, and they're trying to instill the financial prudence in their child. At GyanDhan, we essentially offer a guaranteed best education loan. Now, how does that really work is, we feel confident that with our 15 lenders, we know which is the best lender for you. Or if we know that there is a 16th lender out there which we cannot service, we'll tell you that hey, this is the best lender for you. So we are not the right answer for you, right? But if we are telling you that this is the best lender, then we are comfortable saying that, putting our money where our mouth is, that saying, hey, you cannot get a better offer elsewhere, right? So we know which pen do you need, really. Now coming to education loans. So typically if I had to categorize into two broad buckets to simplify things, one is a secured loans, one is an unsecured loan. In both cases, you might not have cash right now, but one is a scenario where, hey, I have a property. I might not be cash rich, but I'm asset rich. I have a lot of assets. Can I use those assets to get a loan? Yes, sure, you can do that. The benefit of getting a secured loan is, again, you have to look at it from the lender's perspective. There is a security. And as a result of that, what ends up happening is you have a lower rate of interest. And typically the amount of repayment period would be much longer. So those are the kind of benefits you might get if you're going for a secured loan. Contrast that with the unsecured loans, where essentially you don't really have to pledge any property, right? So I'm a individual kind of, I don't want to kind of pledge my parents' property. I can still get a loan today, just on the basis of my own merit. And obviously there will be my co-applicant's income assessment that will come into the picture. So the simple thing I want to highlight on this slide is really the co-applicant's salary as a requirement. So the simple thing you can do is, you can just figure out 1.5 times the loan amount and divide by 100 to get, hey, this is the co-applicant's salary eligibility criteria, if I had to put it this way. Now, again, it will vary by different lenders, but this is a rough rule of thumb I will put for the folks listening to this, that can help them decide if they are eligible for an unsecured loan or not. Now, given the fact that unsecured loans do not require a property, they typically are much faster in terms of conversions. So you kind of turn around a unsecured loan in 5 to 7 days. And just before we got on this live session, I was discussing with Dipesh basically the fact that, hey, ideally even 5 to 7 days doesn't make sense. It should be done much sooner. But again, I think we are on this journey. Our hope is that we get to the place where people get the right loan at the right time with minimum hassles. If you just put them side by side to each other, what does it really mean? Secured loans, typically, roughly you would get up to 2 crores. And again, this is a general number, even exceptions, even beyond this work. Interest rates typically start from 9.3, which is lower than the unsecured loans. You can see the loan tenure is much larger than the unsecured loans. As it comes to approval rate, the mention here is high versus comparatively low. The keyword is comparatively, because again, the idea is, let me take my profile now, my profile with a security versus my profile without a security. Obviously, the chances of me getting a loan with security will be higher. Right? Does not mean that I will not get a loan if I don't have a security. Importantly, who are the lenders? So when we talk about our 15 plus lender, what are they categorized into? By and large, there are three broad buckets: PSUs and private banks, which is what we typically know of. There is the second category in India, which is the non-banking financial companies. The most common names there would be HDFC Credila, which is now Credila, and Avance. And then there will be international lenders like Prodigy Finances and Empower. Again, simplistically putting, PSUs, private sector banks, largely would be secured products. And specifically, when we talk about PSUs, most of the PSUs will have secured products, though now that is also changing. You will be saddled with the issues around complex processes, long turnaround times, yada, yada, yada. The simple answer is we are here to solve that part of the puzzle for you. You don't have to worry about it. NBFCs typically have a higher, broader credit policy. What I mean by that, they will approve more courses, more profiles than you would typically get in a bank. And then international lenders, the difference is really they also do loans without collateral and coordinating as well.
So, Ankit, can you give a few examples of PSUs and private banks and NBFCs and the international lenders?
Sure. So as far as PSU banks, so typically, so when we talk about GyanDhan, we currently are working with SBI, State Bank of India, Bank of Baroda, Union Bank, among the public sector space. In the
Okay.
private sector space, we are working with Axis, ICICI, IDFC First Bank, and there are a couple of other lenders that are in the pipeline on that front. Of these, SBI and Bank of Baroda are typically a secured loan, and again, I'm talking, given that we're focusing on MBA and the ticket sizes will be much higher, I'm not going to talk about the less than 7.5 lakh unsecured loan.
Yeah.
But typically, they will only offer secured loan against security. UBI has a segment wherein for certain schools, they will offer a smaller ticket item without security now.
Okay.
Bank is the only public sector bank is doing that. As far as private banks are concerned, private banks are basically straddling the space between the public sector banks and the NBFCs. So NBFCs typically would be offering more of unsecured loans because they will not necessarily compete. If I have a property and it's all good and dandy, I'll much rather take a loan at much lower rate from a PSU than going to an NBFC. The space between the two is being straddled by private banks, where they do offer secured loans as well, and then they are competing with NBFCs on the unsecured space as well. As far as
Okay.
international lenders is concerned, as I said, Empower, Prodigy Finance are the two key players in that space. So these would be the three broad buckets. Now, again, here the key thing to understand is international lenders will offer a dollar denominated loan or a euro or a GBP denominated loan, versus from Indian lenders, you will get a rupee denominated loan. And that's important. We'll cover it in a different slide. But that differentiation is important because interest rates cannot be compared just on the number basis. One additional thing, which is the footnote here, you can also get a loan from the target country. Now, that's specifically, let's say, the US. If you're targeting an MBA school in the US, you can get a loan from a credit union in the US or from a local bank in the US, provided you have a co-applicant in that country. Now, what that helps you is you can actually avail of much lower rates. And again, I'll give the example like before these the interest rate hikes in the US the last couple of years, when you could get a MBA loan from an Indian bank at 10%, 11%, 12%. You could get, if you had a co-applicant with a great credit score in the US, you could get loans as low as 3%. And again, 3% USD, typically I like to say add 5% to that rate. But even if you add 5% to 3%, it's still 8%. It's still much cheaper than what you would get from an Indian lender. But again, the key and the reason why we don't talk about it a lot is because it's tough to get someone who will want to be a co-signer on your loan and who is a citizen or a green card holder in that country. I stayed in the US for 3 years, and even if I had chosen to stay and I would have gotten my green card or whatnot, to be honest, I mean, the importance of credit score is very, very critical for everything. I'm not sure how many people I would vouch for and be a co-applicant on their loans. We already touched upon the secured and unsecured education loans side by side, so I'll just breeze through these things. But we've already covered the key things. The only thing I'll mention here is the concept of margin money and the loan to collateral value, because these will be important. There are typical questions people have on these fronts. So what margin money typically means is, okay, if my total cost of education is 1 crore, and when we say total cost of education, typically it is not just the tuition fee, it's my living expense, my book expenses, accommodation, blah, blah, blah. So can I get the loan for the entire 1 crore? Or do I have to put some money from my own end? And that is where the margin money concept comes into the picture. That when we say 10%, it means that, hey, for a 1 crore total cost of education, you will have to put 10 lakhs and the lender will then come in with the remaining 90 lakhs. So that is how it happens. And in many lenders, it will happen for every dispersal. So in what I mean by that is, let's say I need 20 lakhs today. The lender will say, put your 2 lakhs, I will give 18 lakhs. That's how it works. And loan to collateral value is just a sheer case of, hey, if my property is worth 1 crore, what is the maximum loan amount I can get? So for MBA, the simple metric could be you could get loan up to 80 lakhs.
So, Ankit, just one question. Does the prestige or the ranking of the business school also matters when we get the loan, especially in terms of the last point that you mentioned, that 80% of the collateral, yeah, 80% a loan up to 80% of the collateral. So is it like flexible if someone is going to a prestigious business school?
Yeah. Yeah, great point, Dipesh. It actually varies by different schools. So, in the previous one of the previous slide, we had mentioned a bunch of metrics. Actually, one of the key metrics is typically different banks will or lenders will have different lists saying, hey, if you fall in this category or if you fall in this school, you might be eligible for up to 80%, or you might be eligible for up to 90%, or only 60%. Even the concept of margin money also varies by different uh, colleges that you're going to. So yes, it really depends on the destination course college that you're going to, and the banks or the lenders' comfort in terms of the risk, perceived risk.
Okay, thank you.
As far as unsecured loan is concerned, again, typically we already discussed the rates are a bit higher, processing fees involved. Processing time, as I said, typically would be 5 to 7 days in most cases. There is another option, which is unsecured education loan without a co-applicant. So typically, all the Indian lenders, you will require a co-applicant. But now we have a scenario where if you're taking a loan from an international lender, you don't need a co-applicant as well. And even ICICI Bank has also launched a product where they offer loans up to 50 lakhs, where you do not need a co-applicant. Now, the way it works is the processing time is pretty much similar to a traditional unsecured product, because there isn't fundamentally anything different about it. However, this will again, to your earlier point, it will depend on the course college you're going to, right? So it's not necessarily applicable for all courses. So let's say for Empower, they will have a certain select list. In case of ICICI Bank, we have listed the eligibility criteria that they require someone who has a minimum work experience, which typically, again, for an MBA applicant, they will meet the most of the cases they will meet the work experience criteria. They just have to figure out whether they're meeting the other criteria or not. I touched upon the fact when I was talking about different lenders, I'd mentioned that international lenders will have rates in USD. So just a quick sidetrack here. The idea really is, do not compare 9% Indian rate to a USD 11% or vice versa and say one is better than the other, because typically interest rates are the currency depreciates at the end of the day. So there is an increased cost in terms of where you're taking a loan from. And we've just given a simple example here, which is essentially goes back to 2012. You took a $50,000 loan at 9% versus a 22.5 lakh loan at 11%. These were the conversion rates. The conversion rates now have changed. And so what it effectively means is that if you've taken the USD loan, you would have to pay $50,000. But if you're taken a Indian loan and you are staying in the US and earning in dollars, you actually only have to pay $28,000 because now your dollars are worth way more, right? So typically, what people don't appreciate is this part of it, right? Now, in the last year or so, because the rates have increased significantly in the US, so objectively, the USD rates might look worse off now. But I still wanted to call that out that typically people just do a one number to the other number. It's not really, it's this is the classic case of apples to oranges, to be honest. How does the education loan process work? Typically, it's you just apply on the website. You can give us your basic details. Basis that we figure out, hey, which is the best fit for you, and then we start your loan application with that particular lender. Try to figure out if there are any roadblocks. We will resolve those roadblocks, and then post that as well. Once you request a loan disbursal, if at any point in time you have an issue, we are there to help you. It just doesn't extend to this loan. It will extend to other requirements in the future as well, which will be, hey, you need education loan refinancing, you need a lower rate. We can help you with that as well, right? But for the first loan, what does GyanDhan help you is, again, we help you figure out the best loan for you. And we are trying to figure out how to get you the loan in the fastest time, increase your conversion chances. And we are not charging you anything for these services. Again, we're not a philanthropic organization. We get paid by the banks, and we get paid by the banks because we increase their conversion rates. And now, does that skew our recommendations? To be honest, our sales executives don't know the payouts we get from different lenders, and also we try to get all the lenders on the same payout rates. So our recommendation will not depend on who or which lender is paying us higher amounts. And this is what I was saying, that it just doesn't end with this loan. In the future, if you need to refinance, you feel, hey, my interest rates are much higher, can I get a better option? We can offer you a education loan balance transfer, saying, hey, maybe now your profile has improved significantly. Can we get another lender to take over your education loan? So that's all about us. Thanks for taking time and bearing with me through this presentation. In case you guys have any questions, feel free to reach out to us on the email, or there is the link on the GMAT club as well. And yeah.
Thank you so much, Ankit, for this. Thank you. I'm sure everyone who is watching this video probably is having much more information about the financing options available. Now, with this, let's move on to the next step. We'll just address a few FAQs that we have received from different people. So, the first question, can NRIs and internationals without Indian credit history get an education loan from India?
So typically, again, most of the lenders, what they do require is one of the co-applicant needs to be having a Indian residency per se, right? So that would be the key thing. That will be a requirement, right? Now there are, and especially again when we talk about international, so if you're talking about an American looking at getting an education loan from India, at least to the best of my knowledge, I don't know of that option. There, the best option would really be the Prodigy or the Empower, right? So
Yeah.
in our spectrum of 15 lenders, there are still 2 lenders who will cater to that kind of a demographic, right? But if we talk about the PSU banks or the NBFCs, yes, there are scenarios where NRIs do come in as co-applicant, but mostly there will essentially be a requirement of one co-applicant being an Indian citizen.
All right. Okay. Thank you for that answer, Ankit. Question number two, we have, can I take loans from multiple providers at the same time?
So there isn't a so yes. So the simple answer is yes. You can take loans from multiple providers at the same time. However, please go through the loan documentation and the loan terms at your end. What I mean by that is some lenders might ask you to file an affidavit which states that, hey, I've not taken a loan from anyone else, and so on and so forth. And then if you are taking loan from multiple lenders, technically you are filing a wrong affidavit, right? And that is not correct. So just go through the terms very clearly. There isn't anything that there was this misconception that, hey, you can only take one loan. Nothing like that exists. What will happen is only one of the loans will be classified as an education loan for the purposes of the tax benefit if you're taking it from a bank.
Mhm.
Right? But I could take a 50 lakh loan from one lender and then a 10 lakh personal loan from someone else. There's nothing that stops me. Right.
All
So
right.
yes, that can happen. Ideally, I would actually talk about that. Maybe it's better to talk to your existing lender itself and figure out, hey, how can you kind of my requirement is this. How can you help me figure that out? Right. So can we get some exceptions and solve it with one lender? But in the past, we have had cases when people have taken loans from multiple different places. And
Absolutely.
what also happens is people, once they have taken a loan, later on they can get a top up as well. So I kind of, again, going back 2 years back, suddenly there is massive inflation all across the globe. I had planned for X, now it's X plus 5. Right. So at that point in time, we had loan programs wherein we were offering loans of 5 lakh, 2 lakh, 10 lakhs to kind of students to be able to meet that shortfall.
Okay. And I think for questions like this and for situations like this, GyanDhan can definitely help because the consultants would be able to advise you what would be the best for you. Absolutely. Okay. And with that, the third question, is my loan approved for just 1 year at a time or for both the years? When do I start the repayment? Is it during the education or after I get a job?
Sure. So typically, most of the loans are approved for the entire course of the thing. So if it's a 2 year MBA, most of the lenders will be approving the loan for the entirety. Now, what might happen with some lenders is they will do a conditional offer for first year and then they will again review it in the second year and do it again. Right. But practically, again, I'm saying from me as a lender's perspective, if you are going for a 2 year MBA program, doesn't really make a lot of sense for me to just look at finances for 1 year and give you a loan for 1 year. Because guess what? I mean, how do I ensure that you are going to be able to fund your education for the second year as well? Right. So that is something I'll definitely want to get a sense on. But so again, by and large, again, as an MBA, every answer is all it depends. But by and large, most of the lenders will approve for the entirety of the 2 years. Now, when do you start repayments? Again, it depends on the lenders. But most of the cases these days, what will happen is during the period of study, you get what is the moratorium. So now that is where it will vary by lenders. Some lenders will require you not to make any payment during your period of study. And especially if you take a secured loan, then you effectively get the period of study plus 6 months to 12 months, within which you're not supposed to make any payments. Right. But other lenders might have a scenario when they'll ask you to make a token payment, which might be 2,000 rupees or 5,000 rupees or 10,000 rupees a month, just to get you in the habit, let's say. And in some cases they might ask you to make interest payments. So whatever interest is due, that you have to pay. So
All right.
that is something where different lenders have different options, and to be honest, it also depends on what you would want, how you would want to plan your finances. So again, goes back to how we started this discussion when you said that, hey, if I don't have finances, how do I do? Right. So I mean, again, doesn't make sense then for to me to start the EMIs immediately.
Yeah. So, Ankit, one question. The loan interest, when does the interest start to accrue? Is it like after getting the loan amount into your bank account, or is it after you graduate?
So the interest starts accruing the moment you draw down on the loan. So what I mean by that is, let's say you've been sanctioned a loan for 1 crore. So today I have sanctioned you a loan for 1 crore. At this point in time, no interest is being accrued. Now, tomorrow you come to me and you say, hey, Ankit, I need to pay my first semester fee, it's 20 lakhs, and I need another 10 lakhs for living expenses. Fine. I'll kind of do the disbursal of 30 lakhs. Now the interest will start, the clock starts today on that 30 lakhs. It doesn't start on the 1 crore, it starts on 30 lakhs. A month from now, you need another 10 lakhs. Then the interest starts computing on 40 lakhs.
Okay.
So that is how the interest starts accruing the day you draw down upon the loan. Now, again, where in cases where you're not required to make any payments during the period of study, what happens is this interest gets added to the loan amount, right? So I took a loan for 1 crore, let's say the total interest of all the drawdowns ends up being 10 lakhs. So effectively, when I have to start repaying, then my EMI is calculated on 1 crore and 10 lakh rupees for the
Okay.
remainder of the 10 lakh. That is how it typically works.
Okay. All right. Thank you for that answer. Before moving on to the next question, I request all the audience and watchers to like and share the video and subscribe to GMAT Club. Your support is much appreciated. And the next question, do I get the money in my account? Do I pay the interest on the sanction amount or the used amount, which you just answered? Yeah.
So I covered the second point that you'd only pay interest on actually the used amount.
Yeah.
You're not supposed to pay money on the sanctioned amount. And that is again one of the reasons why sometimes I kind of tell people that probably err on the side of caution.
Hmm.
Yes, you might have. So the thing is, you will have to pay the processing fee on the sanctioned amount. But think of it as sometimes we make rosy calculations and we say, hey, I'll make some savings here and there, or I'll do the part-time jobs and so on and so forth. But think of it, if you eventually fall short by a few lakhs, then will you want to now go through the entire process of applying for a top-up loan again, or would you be more comfortable knowing the fact that, hey, it's an insurance kind of a thing, maybe I needed 50 lakhs, I'm taking a 55 lakh loan. Yes, I'm paying 1% on that extra 5 lakhs, but that is my peace of mind. That is the cost of peace of mind when I am actually studying, and I should be looking for a job, and I should be looking for an internship rather than I should be looking for how to get another 5 lakh car loan. Right. So
Yeah.
I think that is why I think we typically say be a bit more conservative there. Now, as far as getting the money in your account is concerned, so typically what happens is most of the lenders will transfer the money, the tuition fee directly to the university,
Okay.
and your living expenses will get transferred to your bank account. So what happens is, let's say in the case of Prodigy or some lenders, what happens is they'll transfer the entire money to the university. Now, whatever is the fees will be kept by the university, and if there is a surplus, then that gets transferred to your bank account in the US or whichever geography you are in. In many Indian lenders, what will happen is you will, as I was discussing earlier, you saying 20 lakhs per semester and 10 lakhs for living expenses. What I'll say is, hey, send me the details. I will do the wire transfer 20 lakhs to the university, and 10 lakhs will transfer into your Indian account, which then you can use a forex provider to transfer it to your German account. So that is
Okay.
how it will really work. In some cases, what does happen is lenders will transfer the entire amount as well. So in this example of 20 plus 10, a lender could transfer 30 lakhs to your account itself. And then you can decide how to transfer the money. Having said that, in most of such cases, lenders will typically apply what is called a lien. So that the idea being that if once you have 30 lakhs, you should not use 20 lakhs to buy a car and drive around. Probably 20 lakhs is for tuition. So you will have to show that proof, and only then you can transfer that money.
Okay. All right. So, do you think that this business different lenders have provide the choices as well? Like, let's say HDFC Bank, they just said, okay, I will either transfer to your like bank account or the co-applicant's bank account, or we can just give you the forex card. So, do they even provide us the options?
So um, in some cases, they will provide the option. In most cases, it will essentially be a bundled offering, and
Okay.
you will have to kind of push back in case you need to kind of figure out. Because again, in many sometimes what will happen is lender A will transfer the money to your account and then say, "Hey, now use my service provider to transfer the remit the money." Right?
Okay.
Because now and then when you look at the remittance costs are significantly higher.
Yeah.
Right. So that is what lenders will typically mandate. Having said that, it is not necessary requirement, because I've taken a loan of 20 lakhs from you. I've not taken a loan of 20 lakhs and you have to transfer my money. Right? This is effectively a value added service and it should be treated as such.
All right.
It cannot
Okay.
be forced upon a customer. But
Mhm.
yes, most cases customers also either feel pressured by it, and then they say, I mean, the same classic case of comfort and peace of mind. They'll say, okay, fine, I'm willing to pay a higher forex transfer cost and stuff just to get the loan.
Okay, all right. Thank you for that answer. Moving to the next question, we have how does the credit history affect my loan application? Is there a minimum credit score or employment duration for getting a loan? So just to set up a context here, Ankit, let's say I have been employed for just 1 year. So my this credit history is only for 1 year, and my PAN card will have this information for just 1 year. So how does that impact versus like 5 years of work experience, or let's say 10 years of work experience?
Sure. So I'll actually try to delineate the credit score with the work experience,
Mhm.
because credit score is essentially a metric which showcases your or your kind of prudence in terms of managing credit. So what that means is I could work for, I mean, I'll take my father's example. He took a car loan 5 years back, I think. Prior to that, he had never taken a loan in his entire life. So in his entire working life. So guess what? He wouldn't have had a credit history
Yeah.
because he was a new to credit, right? So credit score only develops when you've taken a credit. So similar to that, someone who is studying in their final year or someone who is still in college, they've not joined the workforce. But guess what? They were working on an app and they saw, hey, I can take a 20,000 ka credit line. And they said, fine, it's a use and kind of move on and I'll repay it. That's actually a credit loan. You've actually signed contracts which say that you've taken a loan or you've taken a
Mhm.
credit line, and that gets reported to the bureau. So you're not really working, but you're still getting a credit history. So that's the first part of it. So just touching upon the employment duration requirements, as I mentioned in the ICICI unsecured loans without a co-applicant, there is an employment duration requirement. But outside of that, there isn't really a case. As far as credit history is concerned, credit history is very critical. If you've been late on your repayments and you have defaulted on your loans, that reduces your chance of getting a loan.
All right. Okay, thank you for that answer. So we have five more FAQs, and we are a little bit behind the time. So what we can do is we can just go through these questions quickly, and then we can move on to the questions asked by the people. Okay. So the next question: I'm planning to apply in a year or two. Any advice to strengthen my loan application by then? Does having a credit card help?
Yeah, having a credit card helps. Just ensure that you repay on time. Don't default on your applications. That will be worse off than saying, "Hey, I have never taken a credit." As far as advice to strengthen your loan application by then is concerned, again, the idea being ensure that your co-applicant has is filing ITRs if they are in the ITRs regime. Typically, what ends up happening is people not been filing ITRs and then they suddenly file back-to-back ITRs. So, simple answer is ensure that you are following all the regulations. You are not defaulting on your loans and credits. Those would be the key piece of advice, I would say.
Okay, thank you so much. And the next question, is there any restriction on the collateral, like the land should be fenced? Is it okay if it's in my parents' or siblings' name?
Yeah, so there are restrictions on the collateral, like the example that we mentioned, the land should be fenced. So typically, open lands are not accepted as property, as valid collateral. Similarly, in many cases, agricultural land will not be acceptable. So there are restrictions, and there are even region-specific restrictions. Like in for folks in Bangalore, there is a khata property, B khata property. Many lenders will not do a B khata property loan. Right. So again, the benefit is at GyanDhan, we have an understanding of region-specific requirements. as well. So there are different restrictions, and our team can help you with that. As far as who is the owner of the property, so yes, it can very well be in your parents' name or in your siblings' name. The only requirement is whosoever are the beneficial owners, they have to be added as the co-applicants.
Okay. All right. Thank you so much for that answer. And the next one, I purchased my house for $30,000, but now its market value is $150,000. The amount of loan that can be sanctioned would be calculated on $30,000 or $150,000.
Um, so the first thing is market value is basically, so the simple answer would be it will be more linked to the circle rates and stuff, because 150K, I don't know how much of it is the black component and how much of it is the white component. So
Yeah.
essentially what will happen is the lawyer will appraise the property value. Let's say if the property value is appraised at 120K, that 120K is the true market value, and
Mhm.
that 120K will be used by the lender to ensure what amount you will be eligible for. It will
Oh,
definitely not be 30K.
okay. All right. Okay.
But
Thank you so much.
typically people have that inflated sense as well. Okay, my property is worth 2 crore, and then it might come in as an appraisal of 1.5 crores. That is the reason why I was calling that out.
All right. Okay. So with that, moving on to the next question. My house costs $150,000, but its EMI is still ongoing. Am I eligible to put the house on as collateral?
Yes. So you are eligible to put the house as collateral. Now, what happens? There will be two things here that are important to note. One is what is the outstanding loan amount? Because let's say if your house costs 150K and you have $100,000 loan still outstanding, right? Then effectively the residual value is only $50,000 or a smaller percentage of that. So only that is the true value per se that will be eligible as a collateral. That's number one. Number two is essentially because there is an EMI dependence at your end, what the lender will also try to figure out is, are we over indebting you, right? So by giving you an extra loan, are we pushing you over the brink, right? Lenders might say, hey, you will not be eligible to repay this debt anymore. So
Yeah.
those will be the two considerations typically people will have. But yes,
Okay.
it's definitely the case. Another thing is wanted to highlight here is uh, if you have a home loan with lender A, but now you're trying to get an education loan with lender B, and what needs to happen is loan has to be transferred from lender A to lender B, home loan.
Okay. All right.
That can be a bit cumbersome, but again, that's where we kind of come into the picture.
Great. Thank you so much. Thank you for that answer. With that, coming to the last FAQ, what are the criteria for a co-signer? Can it be just a blood relative? Does he or she have to be a tax-paying citizen? Can my retired father be a co-signer? So basically, a lot of questions regarding co-signer.
Yeah. So and again, the simple answer is again depends on lenders to lenders, and even let's say to give you examples of private banks, Axis Bank will have a different criteria than ICICI. So what will happen is, but by and large, most of the lenders, I'll say, typically what they require as a co-signer is your father, mother, brother, sister. Kind of that is how typically it will end up happening. Now, some lenders will say, hey, we can take your paternal uncles, maternal uncles, or your first cousins as well uh, as a co-signer, right? So that is how it happens. Now, does he or she have to be a tax-paying citizen? So again, the idea being that, hey, if you have farming income and as a result of that you're not paying taxes, tax exempt, then essentially that's not a requirement. But the reason why I mentioned in an earlier question file ITRs was specifically because if you were doing and you're not filing it on time, then that will be an issue. As far as retired father being a co-signer, so yes, that definitely happens, specifically more so in the cases, let's say for property against loan against property, right? If my father is a retired now, they can definitely be a co-signer.
Okay. So can my friend be a co-signer?
So again, as I said, some lenders will not accept it. In
Hmm.
some lenders, what can happen is they will say, hey, your father has to be a primary co-applicant, and now can I add someone else as a secondary co-applicant?
Mhm. Okay.
Or let's say if your friend is willing to give a property as a security, then as long as your friend is willing to come on the loan and do the necessary documentation, that should be doable.
Okay. Okay. Perfect. Thank you so much for that answer. So with this, we wrap up our FAQs and now moving on to the questions received from the audience. In the meantime, I just want to remind our watchers to kindly like the video and subscribe to the channel. Thank you so much. We have some questions here. Okay. We have a question from Neha. Do you have to pay interest on a loan while studying, or does the loan plus interest become payable after the MBA? So, Ankit has answered this question. Maybe you can just
Yeah. So Neha, the simple thing is you're not required to pay interest, but what happens is if you are not repaying the interest, then that interest is still calculated and it gets added to your loan amount.
okay. Hope that answers your question, Neha. Moving to the next question from Vishal. If someone takes a loan from India, will they be able to get tax savings if they work in Europe or US?
Yeah. So Vishal, I think again, this is one place where I'll say it will depend on the dual tax treaty with that country. This is veering more into the taxation part of it. I will not sit here and say I know the taxation laws for all European countries or kind of all geographies. But what I'll tell you typically in these cases, how it works is, let's say if I've taken a loan, if I've taken a loan from an SBI, and I now am settled in the US and I'm working in the US. What ends up happening is when I took a loan, my father was a co-applicant here. Now, what happens in that tax bracket is either whosoever is the repayer of the loan can avail the tax benefits. So in this case, what can happen is my father can claim the tax deduction. Yes, I'm working in the US and I'm earning, but my father can actually do the repayments and claim deduction on his tax records. But to answer, if you were to just repay the loan, can you get the tax savings? To be very honest, I'll say that that is something that probably a tax consultant will be best suited. Just to give you an example, when I was working in the US, I did claim some deductions when I was filing both the returns in India and the US.
Okay. All right. So moving on to the next question. Which banks, PSUs, privates, and NBFCs are friendlier when it comes to processing unsecured loans?
GyanDhan will help you figure out which are the friendly ones. But what I mentioned earlier on, typically PSUs don't, I mean, historically have not had unsecured loans. It's only recently that some of them are venturing into the space. As far as private banks and NBFCs is concerned, they are definitely much more active, and the international lenders that are much more active. Now, in terms of friendlier, I mean, again, GyanDhan is your friend.
Okay. Then moving on to the next question. Yes. We have a question from Pooja. How a good academic record and GMAT score help in securing loans for education?
Yeah, great question, Pooja. So typically, what happens is NBFCs like they might have some kind of cutoffs. So if I give you the example, because it's a much more broader use case, what NBFCs have is a GRE based cutoff score. So if you have a 320 plus GRE, you can get a higher loan amount and a lower rate, versus you have a 300 plus, maybe a lower loan amount and a higher rate. So GMAT scores, GRE scores, the standardized test scores definitely have a increased kind of, it increases your loan eligibility in terms of the loan amount. It could have an impact on your rates and even your approval rates. So the idea being that, hey, you have a good academic record. I mean, it tells me that you are going to be employable in the future versus another candidate. So I am willing to kind of weight it against a couple of other deficiencies in your loan application. Let's put it this way.
Okay. All right. Thank you for the answer, Ankit. Moving on to the next question. We have from Sagar. If I already have a running home loan and I apply for educational loan too, will the loan amount I will get reduced, or do I have to complete one loan, which is the home loan, before getting the second loan, the education loan?
Right. So Sagar, as we were discussing earlier as well, you can have both the loans. So again, let's say you were running a home loan with lender A, and now you're looking for an education loan, and let's say we figure out that lender B is the best. Typically, what ends up happening is you first transfer your loan, home loan, from lender A to lender B, and then you effectively get what is effectively a top up on that, which is an education loan. So you will have two loans running parallelly at that point in time.
Okay, so the next question we have, can you please shed some light on refinancing loan when it comes to Indian lenders?
Right. So as far as refinancing loans is concerned, so this is a bit, I would say, more of a recent factor, wherein we didn't really have a whole lot of refinancing in the Indian context happening in the past. But the idea really is, think of it, when I'm going for my MBA, there is a certain profile. Now I graduate from my MBA program, and that point I don't have a job. Now I graduated from MBA and I have a job and a high paying job, whatnot. So effectively, my risk profile has changed. Should that reflect in my risk interest rate or not? So typically, what ends up happening is lenders are looking for, every lender wants a low risk asset, and if you have a certain employability and stuff, that just increases your odds. So what now lenders have gotten into is the case of, hey, we can refinance your existing loans and take over the loan. Now, what happens in this process is typically, so again, there is a lot of involved process, but the simple idea would be, let's say I've taken a loan from ABC Bank, and now I've graduated and I feel my rates are very high. I can apply to XYZ Bank. XYZ Bank will approve my loan, and then they will repay ABC Bank the entire amount and then effectively take over the loan. So that is similar to how typically home loan refinancing will work, wherein you do a balance transfer. Now, again, the requirements are very detailed, and there is, I wouldn't say it's a very straightforward process with many lenders, but some lenders have definitely done a great job in terms of simplifying the process to a significant extent.
Okay, thank you for that answer, Ankit. We have next question. What are the key levers when it comes to negotiating interest rates, GMAT, school prestige, scholarship, other loan offers? So, in conjunction with this question, can you also please put some light on like whether we can negotiate interest rates with banks or not?
Yes, and again, in the slides I'd mentioned, pretty much what we do offer is we do work with the lenders to ensure you are getting the best rate. If we feel that there is a room for negotiation, we will work with you to get a lower rate. Now, when it comes to negotiating interest rate, so I'll actually give the example of, we had recently had a loan mela in a few cities, and we are having loan melas in the next few days in other cities as well. Now, what happens in that loan mela is you you will basically walk into a hotel banquet, and there'll be five lenders. Now, Ankit walks in, and there are five lenders, and they'll make a decision then there. So yeah, I mean, uh, lender A has a loan offer for me. Probably lender B is now going to figure out, can they offer a better rate or not, right? And they're doing it even proactively, even before do the final decision, right? So that definitely helps. Similarly, to the earlier question that was asked around GMAT and stuff, you have a better scores, you are going to a better tiered school in the perception of the lender. That increases your conversion rates, your eligibility, and it will also help you kind of negotiate rate, right? But again, to be honest, negotiating rate, again, once I've figured out that I'm going to ESA business school and I have a 760 GMAT, I mean, I can't really change that, right? So then probably that can help me to some extent versus someone else going to a different school or same school with a lower GMAT, and I can do that discussion. But outside of that, scholarship will help. Outside of that, the fact that, hey, I have funding and I don't need the entire amount, can also help. Similarly, other loan offers does help.
Okay. Okay, all right. So the next question we have, what's the typical rate of loan refusal and what are the common reasons?
I mean, I can't really say typical rate of loan refusal, because this is a very involved question, because it really depends on what is my denominator, right?
Yeah.
Are we taking complete applications? Are we taking incomplete applications as well into the consideration, right? So I will actually talk more on the common reasons. So obviously, as I just said, incomplete application, no brainer. You don't have all the documents in place. That is a very, very critical thing that becomes an issue. Like I said, people have not filed ITRs. And now when I'm looking for a loan and I realize I'm sitting in this, I'm seeing this video and I say, hey, you know what? I have to apply this year. Let me file the last 3 years ITRs back to back. That doesn't work, right? So that would be the red signal. Similarly, your CIBIL score is very, very important. The credit score is very, very important. That will be a reason for loan refusal. Loan refusal will also be, again, structural issues in the documents itself. So we talked about A khata property, B khata property as example, or a land without a fencing, right? I mean, yes, you have a property apparently, but that is not acceptable property. So that will be a issue. So those
All
would be
right.
the common reasons typically for loan refusals.
Okay, okay. We have another question which we can quickly have a look at. Can we combine secured and unsecured loan while taking an entire loan? So you have already spoken about like combining loans from different providers, but what if, let's say, my total cost of attendance is 250,000, but I have collateral for only, and I can get collateral based loan for only 150,000. So for rest of the $100,000, is it possible to get a loan, an unsecured loan, maybe from the same vendor or from this other vendor?
Yeah. So again, as talked about, the other vendor example definitely is there, but again, you have to look at the terms and conditions. Typically, what will happen actually is lenders, depending on the loan amount request, and these are typically higher ticket sizes, so there will be exceptions. So what will happen is, as a lender, if you provide me a property of 150K and you are asking for a 200, 225K loan amount, I might make a decision basis the other parameters, the course, college, GMAT scores, parental income, so on and so forth. There will be cases when you will actually get more than 100% LTV, right?
Okay.
So that is a possibility,
Okay. All right.
but again, not a certainty. It's a possibility.
Sure. Okay. So we have next question from Radhika. Is the interest rate higher if both the applicant and co-applicant do not use a credit card or have never taken a loan?
Sure. So Radhika, in most of the cases right now in the Indian lenders, if you are in what if you've never taken a loan which is effectively are new to credit, your rates will not necessarily be very high or higher. Actually, they will be equivalent. What is worse off is having a bad CIBIL score. But if you are an NTC customer, most of the lenders will not look at it very unfavorably.
Okay. All right. So next question we have from Prince. Do financial intermediaries provide only tuition or tuition plus expense living on also? And what's the loan tenure for private bank considering moratorium period?
Sure. So, Prince, most of the, I mean, almost all lenders now cover the total cost of education. So it's not just the tuition fees, it's not just the tuition plus living expense, it's all expenses, right? So from travel to everything else is included. So it is the total cost of education that we talk about that financial intermediaries fund now. Now they might have a limit in terms of what they expect you to bring as a margin money, but they will fund the total cost of education. And as far as loan tenure of for private banks is concerned, so typically you will get the 10 years and the 15-year tenures. Those would be the typical examples. Now, most cases we do see 7-year loan terms, and if you actually see the repayment behavior, Indian students will repay it, and I mean once they graduate, they'll probably pay it in 2 3 years or so, so on and so forth. But what you can get is effectively a 10 to 15-year kind of a tenure. And when I was talking about secured versus unsecured, I had mentioned that secured you can get a higher tenure. So that is the difference. That is definitely a thing that comes into the picture in terms of whether you're offering a property or not.
All right. So with this, we come to an end to the session. But before we go, just one question for you, Ankit. Usually, what happens is, like, I have been speaking with a couple of my friends, and I have noticed that I've noticed that there are like the people who are applying for I-20, they need proof of finances, and to get the proof of finances, they need I-20. So it seems like a vicious circle where you need to have one thing for the other. So can you please provide some comments on that?
Yeah, so I think this is actually, to be very clear, this is the exact problem that Red Light solved 15 years back, right? So I don't think that this is necessarily a problem this day to in this day and age. What does happen is a lot of lenders, the executives at lenders are still unaware of what the product is being offered by that same bank, right? And that is again where our value comes into the picture, wherein we've said that, hey, I mean, this is the documentation that has been this is the draft document, this is the actual set of guidelines that your bank is offering, so you can actually offer a loan. So that chicken and egg problem is no longer an issue. You can get a loan that you will then show to the conditional loan approval, that you will show to the university to get that item 20 document.
All right. Okay, so I think with that we are right at time. So if you have any further questions, feel free to reach out to us or GyanDhan, and we'll just quickly display GyanDhan's email address. So if you have any further questions or you want to speak with someone from the GyanDhan team, feel free to contact the team on the provided email address. And please like and share this video and subscribe to our channel. Thank you so much and have a wonderful day ahead.
Thanks, Dipesh.